Yo, what's good guys? Welcome to a brand new video. In this video, we're gonna speak about liquidity. I still have a lot of questions about liquidity, so this is gonna be next up. Don't mind the background, it's a little bit, it's too lighty, but I have a curtain, so nobody cares. Anyways, let's dig in the charts. So we're on the charts here. Let's just go over 3 topics real quick, okay? So first topic is, honestly, there's 3 types of SLs, right? Liquidity. First is stop loss and TP, right? Then we have demand or supply zones, which are orders. And then we also have just basic liquidity, right? Kind of every liquidity is based off stop loss and TP, but I'm gonna show examples, obviously. So first of all, let's start with stop loss TP, right? Let's say I'm trading Euro USD. I got a nice, lovely setup here. Let's say I bought from here, right? My stop loss is going to be here. So first of all, when my stop loss gets activated, this means that I am selling my buy, right? So that means I'm selling, meaning there's going to be more pressure in the markets going towards sales, because when your stop loss get hit, you're trading in the reverse direction. That's why usually when there's a big point, let's say for example, we're trading at $1 on USD and everybody has a stop loss on $1. If we go through that, we will have a significant move because of all the liquidity building up and then straight moving downwards, right? So that's the first thing. And then the second thing, we have TP, right? So when you smash TP, let's say this is my TP, obviously you're also gonna smash someone's stop loss, right? People say your stop loss is my TP type shit. This is the same exact thing. When you hit a TP, you're gonna hit stop loss, right? That makes obviously sense. But sometimes obviously price is not gonna get through. That's okay. So that's stop loss and TP, very simple. Then you also have demand or supply, right? And we also have another one which I forgot, but I will tell you that. Let's say demand or supply, right? We have to realize that when a demand zone gets marked, first of all, a demand zone has liquidity. And why? Because the demand zone has orders first. A demand zone has hedges from the institution, right? So when an institution hedges, institutions have to hedge, right? They are regulated. They have to legally hedge. If they don't, it's illegal, right? That's just in their regulation. So when they buy, let's say 2K lots, they also have to sell 2K lots, right? Meaning there's also liquidity, right? Right there, there's like 4K lots. Let's say they buy upwards towards here, right? They buy all the way to here. They close their buys. Now they want to close their sales, right? Obviously here they did not come through. They probably went to this one for the retest, but the institution, they want to close their sales, obviously. Meaning that when price comes back to the demand zone, what are you going to do? They're going to close their sales. So there's liquidity, right? When you close your sales, you buy 2K lots, right? Because you're closing your order, right? So that's also liquidity. So supply demand zone also provides liquidity. That's why price usually moves off there. A lot of people ask me why I don't use imbalance and stuff. It's simply because I believe that institutions buy and sell. And based off that, we create the POI thing, or supply and demand. And when price retraces, it has to retrace for the hedges to close, right? It has to, because they don't want to close long before going all the way up. So that's what we believe, right? And then obviously we have basic liquidity, as in, if you want to short, let's say there's a demand zone, a supply zone right above here. I mark this as liquidity, because obviously these are stop loss for people, but also just general liquidity. And then we also have another one, okay, which is a buy and sell stops. You have to realize that people actually trade based on it, which is kind of, it does work, I guess. But whenever this high breaks, like when you're a breakup trader, let's say you wait for this high to break and you put a buy stop here, right? You don't wait for no manual closing, nothing. You just wait for a buy stop. What does a buy stop do? It activates you once price goes exact through it. And a buy stop is really equivalent to a lot of liquidity sweeps. So let's say your buy stop activates, but price goes down all the way, then you're getting just liquidity stop, okay? So that's also one thing. And then obviously when your stop loss gets hit right here, when you have a sell stop, let's say price goes below and you want to sell automatically, your trade will do that. But obviously if price goes back up, it's just a simple liquidity sweep and you just use as liquidity, right? You will just get abused for the market. Now let's get some examples on how we could use this, right? First of all, let's go to replay bar real quick. So what do I see here, right? Let's go on the 15-minute. Okay, I see that obviously we could go to the 5-minute. What do I see? I see we have a nice demand zone here, right? So this is our first area of liquidity, which I'm interested in. I also see I mean, I don't see anything properly here. We do see that we have taken these stop losses, which is also another point of liquidity. Whenever you just swept a high and you don't break through full, you want to be really aware, because sometimes we could really just, not continue the trend. But obviously, as you've seen here, like this is the first fake out, right? This is like the buy stop fake out. You probably would have had your stop loss anywhere here, but simple retracement and then push again, right? So what do I see? I see this. This is my liquidity point. It is a demand point, but since a few of the previous episodes, this is inducement for me. So even if it takes years, it will just simply wait. I mean, obviously you could trade based on RPOIs. Again, these are also liquidity. So what you're gonna do is you're simply gonna wait for price to just come into your demand. Again, we just went above those highs, buy subs activated, price pushes down, beautiful, and that's how we get that's how we get abused, right? And then what you see, price comes back. Obviously, I mean, it didn't create a significant push, but that's okay, because you have covered yourself, because all of that liquidity you have caught in mind, right? What did price do? It did tag in, it did go up. I mean, like 30 pips, which is not really that big, but essentially price used this liquidity, this as well, probably this as well, and then probably gonna come here. So all of that will just be a liquidity, and you have to remind yourself, when a demand zone comes, people will also buy. So that's extra liquidity, right? Because people believe that the demand zone is gonna be valid, which obviously makes sense. So if you take a loss, there's also liquidity, right? So again, what does price do? Again, another fake out right here, breakout, fake out. Again, see, that's how liquidity works, right? So the market just moves with liquidity generally. So if you can find where liquidity is gonna go, then you're just good to go, right? I mean, obviously you have to have a strategy and stuff, but liquidity is just a very, very key point of trading in itself, especially with with just knowing where the market's gonna go is very, very important. Like obviously you could have your entry model and stuff, but if you know the general aspect where the market's gonna go, then you're 10 times ahead of anyone with the best strategy, right? So yeah, that'll be it. Hope it made sense. I'll also provide the other video in the description, because the other video was actually good as well. So yeah, that's gonna be it. Peace out.